Well, hello, Maverick traders. Welcome. It's the 25th of June. Joe with you here on a Tuesday. It's been a quick summer for me. Already past the June expiration and looking forward to a July. Could be kind of interesting. First off, folks, I'm going to give you my 2 cents. You know how this works. Take responsibility for the outcome. I want to break down the markets when it comes to the technical analysis and some of the meaningful news of the day. We are going to make sure that we always share trades with the community, but make sure you take responsibility for it. That's how this works.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the Apply button in the video description. Let's break down what happened today.
Moving into the market analysis, it was pretty much just the opposite of what we saw yesterday, but there's something a little bit more to it. So first off, let's get into the daily news. So the S&P and the NASDAQ put in a nice bounce, stopping what was a pullback over the last few days, but the Dow looked like it had a rally that ended today as well. So it was kind of the opposite reaction. Bullish sentiment remains overall, and we need to be mindful of that because there's a lot of different types of indicators out there that could be false, and we're starting to get on the extremes, and I'll get there in a second. So how did we finish? Well, the Dow down 0.75%. So I mean, it's a pretty good pull to the downside for the Dow that had been experiencing a pretty good bounce over the last few days. Now it is materials heavy and utilities heavy and energy heavy, which is specifically one of the weakest sectors out there. Take a look at oil real quick. It dropped 1.21%. Gold as well. Gold's really not gaining or losing much ground. The SPX up 0.39%, and the Q's putting in a bigger bounce at 1.25%. Let's move to the advanced decline line since we're here. 58% declining, 37% advancing. However, kind of a different story, advanced decline line versus the overall returns. Let's take a look at above below the 50-day moving average. Hasn't changed much. We're waffling between above below that 50-50 area. So let's not try and fight that sentiment. We'll lose, trust me. So here is the S&P. This is a beautiful chart. It's nice. It's moved up. It's moved higher. All sorts of things got out of our way when it came to this wonderful number we saw with that CPI. Beautiful gap. And it's interesting to see that you get a gap from an ascending triangle pattern with these beautiful numbers. The beautiful moving averages. Everything's just perfectly in line. A little bit of hesitation breakout. Now, we did have 3 days. I would personally be comfortable with, and let me go ahead and just redraw this line. I'd be comfortable with something back to this level, and I'm sure everybody else would. Hey, I'm kind of a by the book guy, right? Even below that 20-day moving average right here would be fine, or something on it. Just shows a little bit of reluctancy or a little bit of hesitation or some profit taking. However, it looks like it wanted to kind of push away from the pull that it had yesterday. Now, it has not confirmed this pivot point, but it has a chance, right? And so we can see if this is going to indeed get back above that 5,500 level and exceed it. Definitely leaning towards the bull side. Let's please not change that. Here's the Qs, the exact same thing, but just deeper. What I mean by that, it's just this rally was a lot more aggressive than the S&P. The reason being is because this is your telecommunications, this is your NVIDIA, this is your Microsoft, this is your all that great stuff and your tech. So it's pulled back a little bit. It's great. I would like to see a little deeper pullback, maybe to this line, the 20-day moving average. All right, I'll have to regurgitate it. But indeed, it is looking to set a 3-day pullback with some sort of a pivot point. If you're reluctant to buy anything or believe in the continuation of something bullish, you have to buy the pullbacks. If you think the pullbacks are going to be the end of the world, which they're not going to be, then you could buy the breakouts and throw a couple of bucks at it. Another thing that I want to talk about as we get going is we do not have to buy those outperforming sectors. And what do I mean by that? Well, let's take a look at this sector heat map. So if you take a look at everything that's green and everything that's red, I'm going to see if I can't draw this little line here. Yeah, it's as close as I can go across. But you've got two sides to this line, don't you? You've got this side, and then you've got, well, this side. I didn't draw it exactly correct. But understand that the majority of stocks were down today, right? You saw the advanced decline line. The majority were down. However, we finished super positive on the NASDAQ and slightly positive on the S&P. So it is this, whatever's outperforming is continuing to outperform. It becomes difficult to buy the stocks that are way, way high. However, there is going to be opportunities in some of the sectors that have waffled. And what I mean by that, you got healthcare, financials, There's some out there, the consumer cyclical seems to be emerging. Now, we've got in real estate as well, but industrials, energy, utilities, yeah, they kind of hurt. They look like more of a bear rally. That's fine. You can stay away from those. We could use those as some bearish things, but understand that when energy bounces, it bounces hard. In fact, the last few days, it's had an extreme bounce. But we don't have to play the outperformers, especially if there's just no opportunity when it comes to our risk reward. And what do I mean by that, folks? Well, let me give you just a better outlook. This is today's performance. And you take a look at how the market's finished. But overall, you can see the majority of sectors did not finish positive. All right, great. So you can kind of out the outliers here. These are the ones that you chase. These are the ones that are hard. These are the ones that are overextended. The higher sectors are pretty difficult to buy here because you feel like you're chasing some stuff. Now, everything else seems like it's falling apart. However, there are some mid sectors. And what I'm focusing primarily on, let me go ahead and just rebox this, are the things that aren't as tumultuous. Now, energy is really, really bad. So energy was up on the stronger side. Well, it was weak, but it did perform better because it had the biggest bounce. The biggest bounce because it has been the weakest sector. This is something I don't want to buy, right? However, I might want to look a little bit into the consumer defensive. Basic materials has a couple of good trades. Real estate's pretty decent, and the consumer cyclical and financial. So there are areas here that we can actually just straight up chart. Now, how we can do this is if the markets continue to stay optimistic. If the sentiment remains bullish, then we could take these intermediate sectors. But I am starting to see a whole lot of selectivity in these outperformers and underperformers. So as I move over to our market outlook, folks, this actually becomes a little bit more selective and a little bit harder to do because there are some great stocks out there that just are not participating, and there's some good charts that we could trade sideways to up or sideways to down. We don't have to be +3, -3. We can be somewhere in between and still find good trades. I had to bump this up from a +1 to bump 2, and I don't want to say I had to. It's just a great chart. It's just a 3-day pullback. The S&P looks like it wants to turn around. I could have kept it at a +1. I could have kept it at a 0 for the week, and the reason because it might consolidate, kind of along this area that it's trying to set since this gap. I would not be surprised to see if it actually did retrace to that gap. But hey, folks, I've got to chart the markets in front of us, and that's still sideways to a +2 in my mind for the week. So let's take a look at some trades, folks. I've got NVO, Hood, NVIDIA. Yes, it actually has a nice bullish pattern. It doesn't mean you need to go buy it. I just got done telling you guys you don't have to chase the +3s or -3s. But Hood is one I carried over from the previous week. I liked it as a bull pullback. It did not confirm, and today it looks like it's about to. So keep it on your watch list. Disney, HST, something that's consolidating, range bound. There's a bunch of those out there. But the bear side is deep. It is thick. And take a look at this, folks. These are across a bunch of different sectors. So focus on some of these guys that have just kind of meanderingly sideways to down, sideways to up. And if you can just quiet the noise and just play the inside, there is opportunity out there. And by the way, folks, it doesn't quite change as rapidly as some of those excitable, overbought or oversold stocks. So this is all I got for you. I know it's difficult. These are tough markets, but let's start with Hood. Hood is something that I liked. I shared it with you folks on the 18th. It was this right here, and I said, look, if I could get some sort of reversal candle and a confirmation, I would love this. Now, I got the reversal there, which was the next day, and I got the confirmation on Friday. So the entry was confirmed. It didn't really follow through, but folks, it hasn't fallen apart. This is still a great trade. It's still one that is still feasible and is still working. So, look, if it wants to go sideways for a few more days, great. But if it wants to roll, it starts to go higher, I'm ready for it. So this is a stock that didn't participate in an overextended move to the upside or a massive correction. This is something that's just kind of quietly following its pattern. This is kind of the stuff that I'm gravitating to when I scan. Let's move to the sideways side, HST. Now, what I like about this is it does have a range. It's a little lower on I should say, it's a little bit more bearish than I'd like. Some of these shadows, I don't like the slope of the 20-day. So what I'm going to do with this, I'm going to keep it on my watch list. And if I see this thing bounce off of the lower level here, so I'm a few days early, I want to see this come down and bounce here, or start to move higher here and show, let's see if I can draw this candle freehand here, folks. Some sort of a shooting star, something like this, and start to move there. Then I'm comfortable. So just an example, folks, not one that you have to go chase, but the type of pattern is what I want you guys to pay attention to. You could do this with any stock out there that has this type of pattern, and understand if this sideways to up movement or the sentiment remains bullish, some of these sideways stocks that can't make decisions can continue sideways. This is just one example of it. And then on the bear side, folks, I figured I would show you FCX, Freeport McMoran, something that's a little bit more precious metal stuff. I just like the bear rally on this one. It doesn't mean it's going to confirm and roll over, but I do like it. I just like the setup it had. We had a really nice crossover on the 2050 here. Kind of an equal rally, especially when it comes to the bounce that the Dow just barely got over. So this did turn lower along with the Dow. Doesn't mean that we can't consolidate and shoot up, but I'm going to wait for more confirmation, right, folks? I want to see this get below here and start to move lower. First target's going to be about 47, so something like a credit spread if you want to go a little bit shorter term or diagonalized, or you could just kind of extend it off of this if you see more weakness at a 45 target, things like that. So, but once again, this is in the precious metal sector, right? So you don't have to do that. PayPal was in there. I'm seeing financials. I'm seeing healthcare. There is so much weakness, very specific to stocks. I'm not saying that everything's bearish. If you're going to make a mistake, folks, please make it to the bull side. And then we can just kind of play it from there. So there can be a large disconnect between the leading sectors and everything else, folks. I have been through bubble after bubble, 20 plus years in this business. And this doesn't quite feel like a bubble, but the euphoria is there. And I want to echo what Rob said yesterday, folks. These will go as long as they want to. So to try to fight this is a mistake. Economic reports are showing a balance. There's height on some side and there's falling on the other, but there's this balance in between there. And as long as we have a consumer that is employed and active, I think the Fed's job's pretty easy. They just got to have to sit back and wait for something extreme to happen. Jobless claims, GDP, Q2 revision, durable goods, and then I guess the only thing worth mentioning would be the PCE on Friday, but I can't imagine that waffling too far up or down based on some of the numbers I've seen as of late. Earnings reports, always check potential trades unless you're looking for them. That's all I got, though, for you folks on a Tuesday. Thanks for joining me, and we'll talk to you next time. Bye, everybody.